Hey everyone, and welcome back to Talk Tickers. So it's earnings season, and we're diving deep into the numbers as always. Today we're going to be looking at J&J Snack Foods' latest report. So we're talking soft pretzels at the ballpark, churros at the amusement park, Dippin' Dots, all that good stuff. And get this, they had record sales and gross profit for the year. But Q4 showed some signs of softening. So we're on a mission today to uncover what's really driving J&J's performance, see where the challenges are, and what it all means for you, the investor.
Yeah, it's a really interesting case study. You see this record-breaking year, sales, gross profit, and adjusted EBITDA all hitting new highs. That adjusted EBITDA jumped by 10.2% for fiscal 2024. I mean, that kind of growth in this economic environment is pretty impressive.
10.2%. That's not just impressive, that's a slam dunk.
Yeah.
But hold on, they achieved this despite what they called a dynamic consumer and economic environment.
Right, exactly. I mean, think about it. Consumer traffic and spending were down in places like amusement parks, convenience stores, theaters, restaurants, all key spots for J&J's products.
So how did they manage to pull off this incredible growth then?
Well, it seems like their strategic focus on new product placements and winning over new customers really paid off. They weren't just sitting back, you know? They were actively expanding their reach.
That's a smart move, especially in a tough market. But let's not sugarcoat things. Q4 did show some signs of weakness. Their reported sales actually declined.
True. But there's an important detail to consider. They had one less week of selling days in fiscal 2024 compared to the previous year. When you adjust for that discrepancy, sales actually increased by 3.9%.
Okay, so the decline wasn't as drastic as it first appeared. But still, even with the adjustment, there was some softness, particularly in their high-margin items. Like those delicious soft pretzels and churros. What do you make of that?
Well, it's likely a reflection of consumers tightening their belts amidst the ongoing economic uncertainty. Inflation and rising interest rates are putting pressure on discretionary spending. And those tasty treats might be the first to go when that happens.
Yeah, makes sense. People are probably prioritizing essentials over impulse buys like snacks these days. So let's break down the performance of each of J&J's segments, starting with food service.
Sure. So food service sales grew for the full year, driven by strong performance in frozen novelties, churros, and bakery items. They even landed some major wins, like adding churros to the menus of 2 large quick-service restaurant chains. This shows they're not just relying on existing channels, they're actively seeking out new avenues for growth.
Churros at fast food menus.
Yeah.
Talk about a recipe for success. But you mentioned there was some softness in the soft pretzel category. Do you think that's a sign of changing consumer preferences or just a blip on the radar?
It's hard to say for sure without more data. It could be a combination of factors, including increased competition or just a temporary dip in demand due to economic conditions.
Good point. It'll be interesting to see how that plays out in the coming quarters. Now on to retail.
Yeah. Retail also saw sales growth for the year. This was fueled by the expansion of their super pretzel products. And here's something that really caught my eye. They're launching Dippin' Dots in retail through a partnership with Kroger. This is a big move, taking a product that's traditionally been confined to entertainment venues and putting it right on grocery store shelves.
Dippin' Dots in the frozen aisle. Now that's what I call a game changer. And what about their Dogster's brand? They mentioned a 20% growth in the quarter for those meaty treats.
Oh, yeah, that's really interesting. I think it's a testament to the power of brand loyalty and the pet market in general. Even when people are cutting back on their own spending, they're often willing to splurge on their furry friends.
For sure. Okay, let's talk about frozen beverages. This segment faced some headwinds, right?
Well, on the surface, it appears that way. There was a slight dip in reported sales, but again, we need to consider that week of fewer selling days. When normalized sales actually increased in this segment, driven primarily by improvement in theater sales. Remember the actors' strike earlier this year?
Yeah, that definitely had an impact on box office numbers and consequently concession stand sales.
Exactly. But J&J is betting on a rebound with a strong lineup of films coming out in 2025, including titles like Wicked Gladiator 2 and Sonic the Hedgehog 3. These blockbusters are expected to draw huge crowds back to theaters, which could translate into a significant boost for their frozen beverage sales.
So basically, they're banking on moviegoers' insatiable thirst for ICEs. Makes sense to me. They also mentioned growth in repair and maintenance and equipment sales for frozen beverages. What's driving that?
That's tied to an increase in ICE machine placements. So not only are they seeing higher sales from existing machines, but they're also expanding their footprint, which bodes well for future growth.
It sounds like J&J is firing on all cylinders, even with some bumps in the road. But let's shift gears now and talk about their operational improvements. They've been investing heavily in efficiency, haven't they?
Yeah. They have, and it's already showing positive results. They've successfully implemented 3 new regional distribution centers, or RDCs. Now, this might sound like a minor detail, but it has major implications for their bottom line.
Okay, I'm intrigued. Break it down for us. How do these RDCs translate into actual benefits?
Well, for starters, these new facilities have shortened delivery distances significantly. That means faster delivery times, which leads to happier customers. It also means they can respond to changes in demand more quickly and efficiently.
So they're basically streamlining their entire supply chain, making it leaner and more agile. That's a smart move, especially in a time when supply chain disruptions are a major concern for businesses.
Absolutely. And it's not just about speed either. These RDCs have also led to improvements in on-time performance and increased fill rates. In other words, they're getting products to their customers when they need them, and they're fulfilling orders completely and accurately.
So they're boosting customer satisfaction, optimizing their operations, and ultimately improving their bottom line. That's a win-win-win situation.
Exactly. And when you consider the potential cost savings associated with a more efficient supply chain, it becomes clear that these investments are paying off in multiple ways.
With all this in mind, what are your thoughts on their prospects for 2025? Are you feeling optimistic?
I am. They're expecting improved performance driven by a number of factors. First, they're anticipating a recovery in those key channels we discussed earlier: convenience stores, theaters, amusement parks, and restaurants. As the economy recovers, consumer spending should pick up in those areas, which bodes well for J&J.
Makes sense. So they're essentially riding the wave of the anticipated economics recovery.
Precisely. But they're not just passively waiting for things to improve. They're also being proactive by implementing price increases across several product lines in January 2025. This strategic move will help them counter the impact of ongoing inflation and protect their profit margins.
Smart move. They're not just hoping for the best. They're taking concrete steps to mitigate risks and position themselves for success. Okay, before we move on, I have to remind everyone that what we discuss next is purely hypothetical and not financial advice.
Of course. This is just a fun thought experiment based on what we've learned about J&J's performance and outlook.
Exactly. So let's put on our speculative hats and cook up a wild but plausible trade idea.
I'm all ears. Let's hear what you've got.
So let's say you're feeling pretty bullish on J&J Snack Foods. After hearing all this positive news, what's like a potentially high reward play, given their track record and all those potential catalysts for growth we talked about?
Well, if you're looking for a way to really leverage your capital and maybe amplify your returns, you could think about a long-dated call option on J&J Snack Foods.
Okay, so break that down for us a little bit. What exactly does that mean, and what's the logic behind it?
Basically, you're betting that the stock price is gonna climb significantly over the next year or two. Remember all those catalysts we talked about? Like the recovery of key sales channels, the Dippin' Dots retail, launch the new product placements. If those initiatives really hit the mark, J&J's stock could take off.
Right. So by buying a call option, you're basically giving yourself the right but not the obligation to buy J&J stock at a certain price in the future. If the stock price goes up, you're in a great position to profit. But if it goes down, your losses are limited to the premium you paid for the option.
Exactly. It's a way to participate in the potential upside, but also manage your downside risk. Of course, options trading can be complex, and it's not suitable for everyone. It's really crucial to do your own research and understand the risks involved before making any investment decisions.
Couldn't agree more. And as always, you should consult with a qualified financial advisor if you have any questions. But hey, sometimes the most outrageous ideas turn out to be the most rewarding ones. You never know. So let's kind of recap here what stood out to us about this J&J Snack Foods earnings call.
For me, their ability to beat expectations for the year, even with a tough economic backdrop, was really impressive. It shows their resilience and adaptability as a company. I mean, they didn't just weather the storm. They actually found ways to thrive in it.
Absolutely. And I was impressed by all their strategic initiatives, like expanding into new markets, launching new products, and optimizing their supply chain. They're not just reacting to market conditions. They're actively shaping their own destiny.
Yeah, they're playing offense, not defense. And that's a sign of a company with a strong leadership team and a clear vision for the future.
And that future looks pretty bright, especially with all those potential catalysts for growth in 2025 we talked about.
Yeah.
Like they're saying, hey, we're not just about amusement parks and movie theaters anymore. We're coming for your grocery aisles, too.
Haha, exactly. And with the Dippin' Dots launch in retail, they're bringing a unique and beloved product to a whole new audience. which could mean some serious growth potential. It's a bold move, and it'll be interesting to see how it plays out.
Yeah, absolutely. And let's not forget about their success with the Dogsters brand. It seems like people are willing to spoil their furry friends, even when they're being careful with their own spending.
Yeah, it's a testament to the power of the pet market and J&J's ability to tap into those trends. They're constantly innovating and expanding their product portfolio to meet the evolving needs of their customers, both two-leg and four-legged.
So to wrap things up here, let's leave our listeners with a thought-provoking question. Given J&J Snack Foods' expansion into the frozen novelty space and their proven track record of success, do you think they have what it takes to become a true retail powerhouse?
That's the million-dollar question. They definitely have the potential. They've already shown their ability to innovate, adapt, and execute.
They've got strong brand recognition, a wide distribution network, and a loyal customer base. And now they're making those strategic moves to expand their reach into the retail market.
It'll be a competitive landscape, no doubt. But J&J has a history of overcoming challenges and exceeding expectations. It's a company with a lot of momentum, and I'm really excited to see what they achieve in the coming years.
Me too. This is definitely a company worth keeping an eye on. So there you have it, folks. Another earnings season deep dive in the books. What did you think of J&J Snack Foods' performance? Are you bullish on their future? Let us know what you think.
Yeah, and if you're looking for more in-depth analysis of earnings calls and market trends, don't forget to subscribe to Talk Tickers for all the latest insights.
We'll be back next week with another deep dive into the world of finance. Until then, happy investing.